insurance, as well as climate insurance integration into social protection. And the insights shared today will be invaluable in shaping a more resilient future for Indonesia. Before we start, I would like to ask participants that have joined us today to change your Zoom display name to the format that has been forwarded by the committee in the chat. So it's an organization name in front. Strip your name. Additionally, please also complete the attendance form as indicated in the presentation, as well as the link that will be forwarded to the Zoom chat. Thank you. And please also, throughout this webinar, I would like also to remind everyone to remain muted during the presentations and the panel discussion. And if you're comfortable, please activate your video camera. And following the discussion, as well as the presentations, we will conduct a question and answer session during which you may submit your questions either verbally through the chat box. And so, to kick off our session, it is my pleasure to introduce our first speaker, Mr. Ph.D. Zawani, the Deputy Director of the Resilience Development Initiative, who will deliver the welcoming remarks. Mr. Zawani, the floor is yours.
Thank you, Priscilla. Is my voice clear?
Yes, it is clear.
Thank you. Good afternoon, everyone. Good morning to some of you who are joining us today. Welcome to the webinar, Indonesia Disaster Resilience Financing, Exploring New Possibilities and Challenges. This webinar is organized by Resilience Development Initiative, a global research institution based in Indonesia, with the generous support of the Center for Disaster Protection, CDP. My name is Ph.D. I'm a Deputy Director in RDI. It is an honor to be here with you today. Today, we're going to discuss an issue that touches the lives of millions in the country. As you already know, Indonesia boasts amazing natural wonders, but it is also home to various types of disasters. Information about earthquakes, tsunamis, floods, volcanic eruptions, and landslides have become common to our ears. To many people, staying here is like living in a supermarket of disaster. These challenges demonstrate the urgency to build a resilient country. And to do that, the country needs support to strengthen the existing disaster financing strategy to equip the community to better anticipate, adapt, and recover from the unexpected shocks. I welcome representatives from the government, privates, international organizations, and civil society that join us today. Our discussion will focus on the financial mechanisms, policies, and partnerships that are essentials for strengthening disaster resilience in Indonesia. We will hear from speakers about innovative financing such as index insurance and the integration of climate risk financing into social protection, such as adaptive social protection. But most importantly, we would like to hear your comments and response to these topics. Our goal is to share knowledge and foster collaborations across sectors. By combining our expertise, resources, and innovative thinking, we can develop financial strategies that make Indonesia more resilient, not just in the event of disasters, but also to climate change and economic uncertainties. I can proudly say that the RDI is one of the few think tanks in the country that is consistently conducting research and innovation, as well as providing technical assistance, facilitating policy dialogue among different stakeholders, and advocating policy change in disaster risk and financing in Indonesia. In that regard, I want to say thank you for your trust and collaboration with us. I look forward to the insightful exchanges and insights that are beneficial for all of us. Thank you.
Thank you, Mr. Sawani, for your insightful words and for setting the stage for today's discussion. Next, we have the pleasure of welcoming Ms. Lydia Poole, Associate Director for Evidence at the Center for Disaster Protection, to share her opening remarks. Ms. Poole, the floor is yours.
Thank you so much, and good afternoon and good morning from London. So, as Priscilla mentioned, I'm Lydia Poole. I'm the Associate Director for Policy and Evidence at the Centre. So, for those of you who might not be familiar with the Centre, we are a UK aid-funded organisation established in 2017, based in London. And we really exist to support a scale-up of high-quality disaster risk financing that really works for the people who need it most, because we believe that putting in place plans and financing in advance of shocks can help to deliver much more predictable and timely, equitable and cost-efficient responses when those disasters do happen. So we try to support this scale-up and improvement in the quality of DRF in a number of different ways. So one of our main services that we provide is free and impartial advisory and training services to a range of organisations, governments, multilateral organisations, NGOs, who might be thinking about developing or refining disaster risk financing instruments and tools. And you'll meet my colleague, Connor Meenan, later, who plays a key role in that team and who will be presenting the second session. We also have an evidence and policy and engagement programmes, which is where my work comes in, and which is the motivation for this collaboration with resilience development initiatives. So within that programme, we look to understand what works and what doesn't in disaster risk financing, which is a relatively new and rapidly changing field. So it's important to learn and improve as we go. And we're also trying to understand really what the barriers and opportunities are to greater use and uptake of disaster risk financing, both on the supply side and, more importantly, within the most risk-affected countries. So that really is the motivation for our collaboration with resilience development initiatives and the focus of our evidence work for the coming years. So our desire through this work, through this discussion today, is to try to understand and then amplify through our networks what it is that drives and what challenges the use of DRF by disaster-affected countries. So we're really looking forward to hearing your collective wisdom today and about your insights into Indonesia's experiences and also wider experiences that are going to come into the discussion today. And on that note, I'd like to extend our huge gratitude to RDI for the months of work that have already gone into this research and into the preparation of this discussion today. There's more work to come from this programme, so please keep an eye out for that. And let me not take any more of your time, because we are here to learn. And with that, thank you again for the opportunity. Now that you know who we are at the Centre, please stay in touch. And let's stay connected. And I would, with that, hand back the floor to the moderator. Thank you so much.
Thank you, Ms. Poole, for your enlightening remarks and for highlighting the significance of today's discussions. Next up, before we dive into our sessions, I would like to introduce our esteemed speakers and discuss today. Our first speaker is Dr. Saut Sagala, who will be discussing Indonesia's disaster resilience financing and exploring new possibilities and challenge. Dr. Saut Sagala is a Senior Research Fellow and Chair of the Disaster and Climate Resilience Research Cluster at Resilience Development Initiative. He also serves as a lecturer in Urban and Regional Planning at the School of Architecture, Planning and Policy Development, Institute of Technology Bandung, or Bandung Institute of Technology. With over 20 years of experience, Dr. Sagala has led interdisciplinary research in risk financing, disaster risk reduction, and social protection for both international and national clients, and successfully managing around 200 projects. And his extensive publication record includes more than 150 contributions to reputable journals and conferences. In the field of disaster risk financing, Dr. Sagala has been instrumental in several high-impact initiatives, including leading the diagnostic study on risk financing and insurance in Indonesia, overseeing studies on financing and public expenditure for disaster management at national and provincial levels, as well as developing a technical concept on disaster pooling fund, and continue with stakeholder mapping of disaster risk management and financing, as well as conducting a background study on MSME resilience in disasters. Our second speaker is Mr. Connor Minan, who will share lessons from weather-based index insurance. And currently, Mr. Minan serves as the lead risk finance advisor at the Center for Disaster Protection, leveraging his background in earth sciences and geophysics, and he has a broad expertise in model analytics, disaster risk finance, and resilience research. With over a decade of experience, currently Mr. Menon plays a key role in disaster risk finance and risk analytics, providing quality assurance, technical assistance, and research support. He has advised the International Federation of the Red Cross, or IFRC, on innovative financing mechanism to enhance disaster response emergency fund, the risk transfer, and private insurance market. His recent contribution to the field include a paper on measuring the crisis protection gap and writing on catastrophe bonds for the center's inaugural annual report on pre-arranged financing for disaster. Our third speaker is Mr. Nazaruddin or Raja Puteh, who will explore how integrating climate insurance into social protection can shield the vulnerable. Mr. Raja is currently a project manager at the Munich Climate Insurance Initiative, where he supports the climate risk adaptation and insurance in the Caribbean project. With a strong academic background in economics as well as environmental management, Mr. Raja has over a decade of experience working on disaster risk management, climate mitigation, and adaptation projects in Indonesia. Previously, before joining the MCII, he was with GIZ, focusing on sustainable urban transport and environmental initiatives. And in his most recent role, Mr. Raja collaborated with United Nations University Institute for Environment and Human Security and MCII to assist the Indonesian government in developing a national strategy for adequate social protection, a framework that integrates disaster risk management, social protection, and climate change adaptation. Finally, we have our discussant, Dr. Rozana Himaz, who will provide a response to the sessions and share additional insights on the role of catastrophic modeling. Dr. Himaz is a development economist and chair of research at the UCL Department of Risk and Disaster Reduction. She also serves as an associate professor in humanitarian economics at the University College London, or UCL, with her academic background rooted in economics. Prior to joining UCL's Department of Risk and Disaster Reduction, Dr. Himaz held the position of senior lecturer in economics at Oxford Brookes University and served as a researcher and lecturer at the University of Oxford, and has also worked as a consultant for the World Bank and the International Labour Organization, and has also been the lead author for the United Nations Environment Programme's Global Environment Outlook report, scheduled for release in 2026. Dr. Himaz has also made notable contribution to disaster risk research in Indonesia, particularly in assessing the potential impacts for future tsunamis originating from the Java Trench on household welfare, as well as the recovery of businesses in Aceh and North Sumatra following the Indian Ocean tsunami. And so here are the experiences and the background for each our esteemed speakers, as well as discussant. And without further ado, I would like to invite Dr. Saut Sagala to bring forth our first session, titled Indonesia's Disaster Resilience Financing, Exploring New Possibilities and Challenges, which will offer a comprehensive review of Indonesia's disaster risk finance landscape. Dr. Saut Sagala, the floor is yours.
Well, yeah, thank you, Priscilla, for really setting up and also putting all, I think, very good speakers with all the very important knowledge and experience. I would like to greetings everyone here. Good morning from Groningen. I'm now here in the Netherlands, but happy to be connected with colleagues. Of course, most of you from the participant I've seen from Indonesia, but also I've seen also others from different part of the time zone. Good morning, CDP colleagues, and then MCII and others. I would like to start with this. I know this is very, I would say, in terms of the time, we have limited time to share, but let's try to use this. So if this can be shared, yeah. So this research or this project, it is a collaboration or supported by CDP, where RDI team is assigned uh, to do study on disaster resilience financing or disaster risk financing, and how it is in the context of the current progress, the new areas, pathways, possibilities, and challenges. Obviously, you can see from the names here, not only me, there is also Irene, Felix, Vika, Wira, even Priscilla, and then others also from RDI who are, working together to develop this concept. But of course, we also need to acknowledge the inputs from all the interviewees and also the key informants that we interviewed. And this is part of, I would say, really collaborative work. Maybe we can start with the next slide. Yeah. Well, I'm going to speak all of these things. So I think let's go to the introduction. In terms of introduction, of course, we will start with why financing disaster risk, disaster resilience. Here we also put, I think, common term, of course, disaster risk, but in the larger context, we want to move towards resilience, right? So hence we also put disaster resilience as the title here, but sometimes interchangeably with risk as well. But how it matters, we'll go in the next slide. I would like to start with this picture. I think some of you are familiar with this, but our world is at risk generally. So in many ways, I think countries experience disasters, different type of disasters because of many things, including the vulnerability. Vulnerability is uh, correlates positively with population increase, and population they are not single, they differ based on age, based on conditions, based on many other things, and that hence make the vulnerability conditions. And when there is also physical condition of such as hazards, and also the word comes is like climate change, it will impact many things, including increasing the global risk. And this risk that we have now, Indonesia and the Philippines, unfortunately, the list of the 10 countries here is too small to be seen, but Philippines is number one, and then Indonesia, the second one here. And of course, there are many other versions, but it shows that our world is at risk, and Indonesia, obviously, has been mentioned before, is also at the very top of this risk. Next. We see the details of the risk profile of Indonesia. Now we can see from the province, from the most western part until to the eastern part, most of them are exposed to disasters. Last year only, we have, according to national disaster management agencies, more than 5,000 disaster events. And even this year also, we have very large, like, landslide, uh, flash floods, and many other things. So that's because of the conditions that I mentioned earlier, from the population characteristics, from the location, physical, and many other things. Next. To deal with such things, of course, we also need some measurement. And one thing to measure that, of course, how we allocate our capacity, our funding, our resources to deal with that. According to many sources here, from the National Disaster Management Agency, Ministry of Finance, UN, the World Bank. There is, of course, some disaster funding gap in Indonesia. And if we see from the potential exposed to people life and also losses, it's also quite a lot. And with the worst case scenario, for example, there can be more than, for example, 3 trillion for physical damage in average. But it can be more if there is any large-scale disaster like what happened in 2018 Central Sulawesi earthquake, which counts over the, I think, around 25 or almost 30 trillion Indonesian rupiah at the time. Or to give you a context in dollars, it's over, I think, 1 billion or something. Yeah. Next. The fiscal risk in Indonesia, because we are talking about financing, right? So we see it here from the impact of the short term, the impact on the fiscal capacity, and the long-term economic consequences. This picture is from the uh, uh, West Sumatra around April or May. Has been flash floods happen, and what is really, of course, the impact was huge, but it was also a combination of geological events such as volcanic eruptions, and then the debris flows came in after coming to the rainy season. So the debris flow, uh, induced after the volcanic eruption. So the combination of this kind of risk would be very very important to be considered. The impact to the infrastructure, the loss of assets, not to mention, of course, the lives affected, and also the people that have to be displaced. So in terms of economy, it is long-term impact, and it can cause, at least in the regions or in the parts of the districts, can be, there is instability or impact to at least the livelihoods of the people here. And therefore, there is a need for, of course, allocation of funding from the government for this emergency response and also recovery, or even before that for the risk reduction. Next. Talking about allocation of funding, of course, we need to talk about the governance, financing disaster resilience. Next. We have something, of course, Indonesia, and can be similar with other countries if we put it in the larger context, but the details may differ. There is, of course, the role of the government from the national and also subnational. There is the role of national and international organizations, from the UN bodies, from the NGOs, development banks, and so on. But there is, of course, we are talking about the impact to the communities, and that can be also connected with the private sectors from the risk transfer perspective, such as insurance, or even the communities who are close to the locations, or also part of the private sector. So, for example, if there is any flooding in near the industrial areas of Jakarta, like Karawang or Bekasi, of course, workers cannot do the work, or even, of course, some informal sectors will be affected, and so on and so forth. So these kind of things would be needed to be, analyzed and also taken into account. We have what is called regulations. We have also the instruments for the financing. I think it will show in the next slides, and then some coordination and collaboration among these, I would say, entities or institutions, all the way up to the community level. And there is role, of course, in terms of data, in terms of research, in terms of how, the pilots at the grassroots level, to help to make sure that there is a public financing management and the risk transfer or insurance. Next. This is another context, yeah, in the decision making. When we talk about disaster, of course, there is National Disaster Management Agency, but talking about disaster risk financing, disaster resilience financing, it will be beyond the disaster management. Although on disaster management, of course, it is also not only from the disaster management agency, including, of course, others such as the public works, such as the, from the climate change, for example, from the Ministry of Cooperatives and Small Medium Enterprise, National Development Agency, and so on and so forth. But we can see from here, there are many stakeholders that come up with their own task, responsibility, and also perspective. Here it becomes also not easy, of course. There is, of course, a challenge and how to govern and the role of these different institutions. The key stakeholders I mentioned earlier, in addition to that, of course, there is within the Ministry of Finance, there is Fiscal Policy Agency, there is Directorate General of State Asset Management, Financial Services Authority, including also the Association of, for example, General Insurance and so on and so forth, and other private sectors, as well as the local governments. Next. Now, let's go to the practice. And this is also connected with the policy. Next. We have what is called Indonesia DRFI strategy, developed by the Minister of Finance, Fiscal Policy Agency in 2018. This slide is quite common, already being shared by colleagues from the Ministry of Finance, also being used by the National Disaster Management Agency. But I would like to highlight here that Indonesia has already, based on this strategy, we already implemented some of this. For example, on the household insurance, you can see here, there's the details on the left-hand side from how the insurance to the agriculture, insurance to the fishery sector, insurance to livestock, and so on and so forth. There's also the state-owned building insurance that was, already implemented for a couple of years, and it also helped cover for some disaster events since end of 2019 up to now. And I think it also shows how allocation of the risk transfer help also at least the national government, not yet at the local government. There is what is called also the allocated fund, the regular one from the presentation, by national government, and also disaster pooling fund that is still ongoing. My time is up. There is also a reminder here, but I will make it quick. Next. These are the details from the pre-disaster, emergency response, and post-disaster. This is shown in our report, which later, of course, can be shared, but it's still ongoing. So based on our study, there are still difficulties in identifying the budget items that contribute to disaster management. Because when you talk about disaster management, it can be from the pre-disaster, and also like a regular budget can be also seen as part of the budget allocation. For example, if there's any disaster, Ministry of Health, Ministry of Social Affairs will be involved, and that can be part or can be considered as disaster management budget as well. But it is indicating a disaster management that is more curative than preventive. And there is also findings on regulations, all the details shown also here. Next, I'll make it quick. And this is at the local level. The example from several provinces in Indonesia that show about how the trends from 2016 up to 2023. And Aceh experienced a significant increase, for example, peaking in 2018 and 2020, while with a consistently upward trends. However, in Central Java, West Nusa Tenggara show a gradual decline, indicating potential shift in priorities or increased efficiency in fund utilization. So these dynamics will be important to be, of course, observed, monitor, but also used as further decision-making compared to what is really experienced by this region or these provinces in terms of disasters. Next. Disaster pooling fund is ongoing. There is a presidential regulation on that, and this time is in the context of setting up all the process to make sure that technical regulation will be there. There is a understanding of all involved stakeholders before making it really running in terms of how it contributes as planned in the disaster risk financing strategy, the 2018 strategy that I mentioned earlier. Next. This is the contingency loan implementation. I think I'm going to skip this for now because of the time, but let's go to the slide on the DRFI in practice, disaster insurance mechanism, for example. Next. Yeah, next, yeah. The climate insurance implementation, I think this is related with Raja's next presentation, perhaps on climate financing. Hopefully he can share a bit about the perspective of the climate financing. But we do have findings, for example, with the low insurance literacy, the selection bias and vulnerability to the reallocation. And it caused some challenges faced by the agriculture and fisheries insurance programs that include scaling up is still difficult, reducing the adverse selection and enhancing the insurance literacy among communities, farmers, livestock keepers, fishermen, and so on, and to align that with the existing, the premium with the existing risk. There has been discussion about how to connect with the, the index like insurance, but it needs risk modeling or analysis on that. Next. I think let's go to the slide. I think we can skip this. Let's go to the slide 24. Just make it quick. Yeah. Now, building the future of disaster. So this is the key challenges in disaster risk finance. There is on institutional and capacity constraints. It is ongoing, not only in Indonesia, but other countries as well. How to set up the institutional frameworks, the inequality in the government and community capacity, and then the challenges in the infrastructures. In the financing, we need to be innovative to think about what kind of resources, and hence, I think this is the combination between government and then the international development agencies, and also with the private sectors, while increasing the innovation and also the resources. And then data will be very important as part of the decision making. We still have some gaps, insufficient data on how to do the risk modeling, disaster risk, and so on, inadequate the risk assessment, and also behavioral factors on risk awareness, and also underinvestment in prevention and preparedness measures. Next. With this, we see some opportunities. I mentioned earlier about the innovative financing options. So it needs to be connected with the global best practices to examine relevant factors and try to adopt some innovative mechanism, and then public-private partnership and community based on disaster resilient financing initiative, and also to increase the collaboration, and also finally using the technology as advancement, like how the information technology can speed up the process, the use also machine learning, big data analysis, and so on, to make sure that we know, for example, the trends, and can help us to anticipate for what's going to happen in terms of risk and so on. Next, I think this is my final slide. The way forward. I mentioned earlier about strengthening legal and regulatory framework, and then enhancing the data. And on data, actually, it can be connected with the adaptive social protection. It is also another ongoing and also a global, I would say, movement and also concept. And then improving central government risk transfer instruments, developing the market-based risk financing products. We need a lot of analysis from the micro and macro analysis, including how it connects with the climate insurance, and supporting the adaptive social protection to make sure that the financing component will be there to be part of the protection mechanism. With this, I think I will conclude and look forward for the discussion, and also hear from other speakers, and also any further feedback. Thank you. Over to you, moderator.
Thank you, Dr. Sagala, for an insightful presentation. A few things that can be highlighted is Indonesia's current progress in disaster risk finance implementation from framework as well as instruments, and also highlighting some key challenges such as financial sustainability, information gaps, and data limitations, while also have opportunities to leverage technological advancements and innovative financing options, including some way forward steps for disaster risk finance in Indonesia with enhancing disaster risk data, developing market-based risk financing products, as well as supporting adaptive social protection. Moving on to our second session, titled, and the session will delve into the global best practice in weather-based index insurance for pre-arranging disaster finance. And our speaker, Mr. Connor Menon, will explore real-world examples and analyze the challenges encountered, as well as extracting valuable lessons that can be adapted to the Indonesian context. Mr. Menon, the floor is yours.
Good morning, good afternoon, colleagues on the line. I think there's a slight typo in the heading, so it's not in the Caribbean that I'll speak of, but mainly in the African context. So
Yes.
just to make that correction. So just briefly, my name is Connor Menon, and I work mainly within the advisory team at the Centre for Disaster Protection. And what that means is that we as sort of advisors provide free and independent advice on financing, risk financing for partners and clients who are facing questions about what's the risk, what's the optimal mix of risk financing instruments, or how to develop and design individual instruments. So we tend to bring a multidisciplinary view to these things. In my experience, previously to working at the centre, I worked within the private sector in a risk modelling and capital markets advisory team. So I've seen a little bit what happens on the private side of these types of initiatives, and now have worked together with partners across the multilateral system, including development banks, donors, various different humanitarian organizations. And I think really what we try to bring as an advisory group within the centre is that multidisciplinary view. And what I'll talk about a little bit in this presentation is the requirement for multiple sets of expertise and experiences to feed into these questions. So I think oftentimes when we think about disaster risk financing, we think it's all quite technical and finance oriented. But ultimately, these financing instruments need to respond to the defined needs of governments or responders or whomever. So they really need to link as well to the expertise that allows you to develop suitable plans and to work within the sort of policy and political context of these things as well. So it does really take a much broader set of expertise to develop these things well than just pure finance or pure technical expertise. So thanks for the opportunity to participate today. I'm going to share a few brief examples and perspectives on the use of index insurance for drought risk. Again, taking the Africa context. So firstly, I'm going to take the example of which will be familiar to many, I expect. So the example of the African risk capacity risk pool as a case study, and secondly, I'll highlight some findings that we raised using a process learning exercise that investigated the process of a parametric drought index trigger design exercise applied for a humanitarian anticipatory action activity. So to begin with, if we go to the first of two slides. I just wanted to raise the example of the African risk capacity. So globally, and our focus is typically on the sovereign disaster risk financing side. So essentially, those financial instruments that are available to governments to provide either liquidity or financing for specific activities, or the sorts of financing that large humanitarian organizations can use to prearrange money against their future humanitarian responses. So within this context globally, African risk capacity, I would say, is quite a long-standing initiative that highlights some of both the role for these types of instruments, but also the types of challenges that exist in terms of developing and purchasing these types of prearranged index-based insurance mechanisms. So just to very briefly give an overview about what African risk capacity, or ARC, is. So ARC is a multi-country risk pool, which is offered now parametric insurance for national and now humanitarian responders. ARC offers a range of different types of parametric insurance policies, including parametric insurance for drought. And just to be clear, so when I talk about parametric index insurance or index insurance, what I mean is an insurance policy that is activated based on assessment of an index. So it might be measurement of rainfall, it could be measurement of vegetation greenness, or other such measurements. So when we talk about index insurance, the index is an approximation of the financing need that you're trying to prearrange financing for. So within the context of drought, the ways in which drought events affect lives and livelihoods, and the types of costs that are borne by either humanitarian or government responders are often quite difficult to measure in real time. So in these types of situations, it can be useful to have an approximate measure of that financing need. And the approximate measure in the case of drought index insurance can take one of many forms. So I've done various different technical exercises now to try and work out what the right flavor of drought index insurance is in different situations. And what I would say, one point of learning would be to say that it's not necessarily the case that there's one best drought index that's going to work equally well in every different situation. So really it is a case of trying to understand what is the local context, what are the different forms of livelihoods, be it pastoralist or rangeland type livelihoods, what are the range of available data that could support the design of indices, what are the types of costs that you're trying to develop index insurance for, etc. And that assessment can really help to understand firstly, if it's possible to develop a suitable index insurance product or index risk financing product, and secondly, what the form of that index might look like. So back to ARC. So what makes ARC different or interesting as a case study? So one of the main things that we would say sets ARC apart from other pure risk financing pools is that it has two strands. So one is that it provides the parametric index insurance that countries and humanitarian responders can purchase to protect them against future drought impacts. But it also has a second component in that it requires the buyers of the insurance policy to put forward what their plans are. So what are the contingency plans that these risk financing, this drought index insurance is being purchased to pay for. So why that's quite a powerful tool is that while risk financing and index insurance is useful because it provides, in principle, fast cash, fast money, so it creates that additional financing space for whoever the responder is. The value of that fast money is only as valuable as the activities that it's able to fund. So within these risk financing initiatives, the Center for Disaster Protection has a framework that comprises what we call money in, so the types of instruments, and money out, how the money gets spent, what are the activities that what are the activities that the financing is actually used to pay for. And the effectiveness of a disaster risk financing strategy is really only as effective as those two things combined. So as I mentioned earlier, it's not only the financing component, not only the financing expertise that's needed within these settings, but also expertise that can help to work out what are the appropriate set of contingency mechanisms, what are the activities that need to happen in response to a disaster, and all of the operational needs that go into essentially making sure that those things happen when they do. So, the effectiveness of these systems is only effective as the weakest link. The risk financing, the money in is critically important. The money needs to be available when it's needed. but it's also important to understand what needs to happen and when. So what are those activities? What are the disbursement mechanisms, etc. So ARC is a useful case study in that it tries to address both of those things simultaneously, and that it requires the establishment of a contingency plan at the same time as a purchase of the insurance mechanism. So that's one thing. A second new innovation with African risk capacity is that they now also offer what they call a replica insurance policy for humanitarian responders. So this replica is essentially allowing humanitarian organizations such as the World Food Programme to purchase a similar insurance policy to governments in certain settings. And so why this is useful is that in practice, there are a set of responsibilities that are held by government, and in other settings, there are potentially people within those countries that are not typically reached with government systems. So in those situations, the international humanitarian system has a responding role. And so by offering insurance policies to both government and humanitarian responders, it creates this coherent set of protection across the population. So it acts, as a means of providing money to access more people, but it also encourages somewhat of a coordination mechanism between government and humanitarian responders. So in the design of these initiatives, in the design of these instruments, and in the design of the contingency plans, both parties are sat around the same table, and this structure really does generate and create a coherence across the government and humanitarian responses. So that's the second thing. And I'll move just briefly on. I know time is short today to the second and final slide. Just to highlight that there has now been it's still an evolving topic, but there has been a lot of work done now in developing different index insurance. And in particular, there's been a lot of work done to try to develop different drought index insurance products or drought indexes to activate different types of finance or different activities. And so one of the previous projects of the Centre for Disaster Protection is that we carried out what's called a process learning exercise that was attached to the trigger design exercise for a dry spell, a drought trigger for UN OCHA, so the Office for Coordination of Humanitarian Affairs in Malawi. And so what that process learning exercise is essentially a researcher that's embedded within the design exercise that can assess, using a range of different methods, what the actual practice of developing this index is, and where the challenges arise, in order to understand in practice what the challenges and what the best ways forward, what the best practice are in terms of developing the drought index. And so the findings from this exercise are actually quite similar to things that I had previously observed, having been on both sides of those trigger design exercises. So to sort of characterize and simplify what is quite useful research, which I recommend that you look on the site to review. I've included a link here, but of course happy to follow up if people want to ask where to find different things. So to simplify some of these findings, I would say what lessons were learned. So the first would be that it's critically important within these design exercises. So before setting out within the technical work to develop individual risk financing instruments, it's important to define the problem first. So what is the financing need that the risk financing is intended to provide prearranged protection for? So again, this comes back to this point that there's a requirement to think about the full chain of disaster response, not just the money, but also the activities and the shape of the financing need. So to say that essentially the technical definition of the trigger, so what is the right combination of data, what is the right type of instrument, what is the right amount of money, when should it be activated, etc., needs to follow from the desired response to the shock, and in this case, the humanitarian outcome. So what situation does the responder, does the risk holder want to enable, and what does it want to avoid? So when you've got a better view around the shape of the problem, that's when you can develop better solutions. And I've seen it oftentimes happen in this space, in that people get very quickly towards the what is the insurance, or what is the index? How do we design the trigger, before having, a clear and coherent picture amongst the group as to what actually is the shape of the problem. And there's a phrase from architecture that says form follows function. So the form of the building needs to follow what it does. The shape of a hospital needs to reflect the fact that it's a hospital to deliver. And the same principles can be applied to disaster risk financing. What is the function of the risk financing? What is it intended to do? And the shape of that risk financing can follow from that definition. So that's one thing. The second would be that the process for developing these things matter. So again, it comes to this point that often the technical work happens very quickly. So, what's the best, most accurate parametric index? But in practice, again, you need to take things one stage at a time and start with that clear internal definition and coordination around what it is that you want to achieve, what it is you want to avoid, and then get to the question, okay, well, within that problem, what are the range of options that could be feasible? And within that, then the prototyping can start to happen in the index design and selection and the processing of that instrument. So the operational perspectives on these things, defining the process, getting the staging right, taking time to do the boring things first are quite useful to the overall success of these types of activities. And the thing would be to say that trigger design and index design is often a new activity for many of the people involved in these processes. So disaster risk financing is quite a niche expertise set of expertise that's needed, and index design is, again, we're talking with scientists, we're talking with risk modelers. This is often not familiar to people that are involved just in the general financing space, so within ministries of finance or within ministries of planning. So it can take a little bit of time just to get on the same page around what it is that these things can do and what the best approach to that is. So this is another thing. Again, it comes, the technical component is one thing, but the operational and the practice of doing these things is another. And just encourage, again, to create that space, to take time early to make sure that everyone's on the same page about what it is that is the desired outcomes, essentially. And I'll stop there because I know we're short on time today. Looking forward to the discussion.
You, Mr. Milan, for sharing important lessons from case studies in African risk capacity, or AFRC, as well as the UN OCHA dry spell triggers. So a few things that can be highlighted is the need for buyers of insurance policies to develop contingency plans on how to use the payout to ensure the benefit of fast payouts. And insurance buyer can be expanded not only to governments, but also humanitarian organizations to expand the reach of insurance to people who are not typically covered by the government systems. And from the UN OCHA dry spells triggers in process for anticipatory action in Malawi. There are three steps, which would be the first to define the problem, or what should this finance mechanism address, and second, the process matters. So one stage at a time, starting from a clear understanding for the problem or the triggers before being followed up by the scientific and more technical aspect of the work. And lastly, trigger design and index design is quite novel and new for a lot of stakeholders, and it requires significant research to include many unknowns as well as complexities. Next on would be our final session, titled Shielding the Vulnerable, Integrating Climate Insurance into Social Protection. In this section, our speaker, Mr. Raja, will explore the vital role of climate insurance in enhancing social protection systems, and we'll also discuss on how integrating climate insurance into existing social protection programs can strengthen resilience to climate-related shocks and foster a more sustainable future. Mr. Raja, the floor is yours.
Thank you very much. Let me quickly share my screen. Can you see my screen okay?
Yes, we can see your
Excellent.
screen.
Excellent. All right. Thank you very much for having me in this panel for RDI. And also, I'm really happy to see some familiar name and faces in our participant today. My name is Nazaruddin Puteh, also Rajas, come from Munich Climate Insurance Initiative. The initiative is a think tank on climate change and insurance based in Bonn at the UN University, at UN campus that found in 2005. So as young adult, we work on promoting to facilitate to make a forum to make climate risk insurance available, especially for poor and vulnerable communities in developing countries. Our work is very much on policy and governance strategies where we we try to advocate using a risk transfer in policy agenda, for example, at the UN Triple-Cs, like a COP, and also in the global dialogue. So we promote to use a risk transfer, especially for poor and vulnerable communities. And we have also a team working on analytic. So as mentioned earlier by Bang Saut, there for the map, and then where are people located, and also how many disasters. So then the analytics team will quantify the risk and put price on the risk, and which one that we can transfer, which one that need to be absorbed by community, for example. And then we have a team working on solution and partnership. So we work with local partners. We work in Africa, in the Caribbean, or also in the Pacific, that to provide a product in the market and work with the private sectors. I will share a little bit more later on my work. And so as 19 years old adult, young adults, as I said earlier, so we engage in several projects in few countries, as you see on the map. And what I want to show is a few projects that we are currently implementing that's also weather index insurance. And just want to make it a little bit clearer to participant that is on insurance product, you know, that you have indemnity product like your car insurance, for example, when your car is broken and then you claim, and then the insurance company will make justification and also examination, and then they will pay your coverage. The weather index-based insurance or parametric insurance, this type of insurance is based on pre-arranged insurance. For example, when we talk about cyclone, and the trigger would be based on the wind speed. Let's say the wind speed is 100 kilometers, and then people will get directly a payout. So the insurance company will not come to check either your horse is broken or your, for example, farm is broken. That's why when Connor was mentioned earlier, people get quick payout because the insurance company will not come to check either the farm is broken or the house is broken, but they will pay directly when the trigger is met. So we have one project. Just want to show you how the trigger looked like. I mean, if I will not go deeper on this, and this is in the Caribbean. We work, we provide a solution for 5 countries, as mentioned here, pilot country, Jamaica, St. Lucia, Grenada, Belize, and Trinidad and Tobago. I'm leading this project. And we have one project as well in Fiji, in the Pacific, which also consisting Fiji, Vanuatu, Tonga, Samoa, Solomon Island, and also Papua New Guinea. So the concept is similar. You see the price is different because the price is using the local currency. And I just want to go back to Indonesia case, and I want to show a very nice map that's prepared by Bappenas, the Ministry of Planning. And this information is based, if I see, is based also information that presented by Bang Saud earlier from BNPB. But the nice thing is here, you look at how often the disaster happened. This map is in 2021, but it's enough to give us a pictures, the urgency of the RFI. So here you look at the map. Every province show how many time disasters that happen in this map. But you see from the color as well, the darker the colors, the more poor population is located. So then when we look about risk transfer, it's about how much that hurt vulnerable, right? Who are vulnerable, who are exposed for this disaster, and then that is they are at risk. And interestingly, as Priscilla mentioned earlier, that the one project that we support the Indonesian government through GIZ earlier on preparing a national strategy on adaptive social protection. And we also did hazard exposure and vulnerability assessments, or HAVA. From this assessment, we look at, as mentioned by BNPB, there is no profit that's low risk and all profit are high risk. But when we look at this assessment, we see where our poor population are mostly located and then what kind of risk do they expose. So we see that it's like if we choose 5 provinces, and these on the map show that 5 provinces are the most vulnerable or could be like the most hotspot in Indonesia based on this assessment with different secondary data from available from the government. Yeah. And coming back to our topic today, just want to bring everyone to the same page that when we talk about climate insurance or climate risk insurance, is financial risk management that to transfer economic loss from individual organization to insurers. And this is it's including also to risk pool entities, as previously Connor mentioned about ARC, African risk capacity, but the risk pool also consists in other part of the region. For example, the CRIF SPC within the Caribbean also risk pool, and also Pacific PCRIC also in risk pool. And in our region in Southeast Asia, we have a sea drift, and sea drift also is like the same risk pool where a country register as a member and they buy policy from them, and they will get money for budget, a state budget. And like look at social protections, generally social protection is like combine or range of policy and programs which aim to reduce consequences of poverty and exclusions. And I will dive a little bit more later where this social protection is comprised of social assistance, social insurance, labor market intervention. So when we talk about climate insurance, social is a part of social insurance. And adaptive social protection is more about integrate social protection system with climate change adaptation and disaster risk management. And this is the objective is strengthen country and people resilient from climate and disaster risk. And of course, the adaptive social protection is not only for climate and disaster. If we see in the last years, COVID-19 happened, that is the social protection became the core, the backbone of the country. So people cannot do work, they are locked down, like people need to stay at home, and then the government need to find what program or intervention that's to support people. And adaptive social protection, that is combinations between social protection, disaster risk management, and climate change adaptations. From our previous work, we look, for example, that are cash transfer, that PKH over there, and also UDB and ALMP, and just its different program on social protections and climate change adaptation. The government we are talking about government program here, you know. So the government have agricultural insurance, and our government also have aqua insurance, which mentioned in the first presentation earlier. And the government also have a RUN API, which is National Action Plan for Climate Adaptation, that's also reflect for sector that is affected by climate. And on disaster risk management, there are so many important information, especially like INARIS, which is a disaster information map as real-time data managed by BNPB, and also HEWS, and that is also related information. And interestingly, that is the government have Destana or Katana, which is community-based for disaster risk management. And let's look how social protection functions. So if you look at social protection, so social protection is not only cash transfer, it's not only BLT, it's not only like a free ride. So social protection is like wide range. So they are non-contributory and contributory. What I want to highlight here on blue, you see like social assistance. As that is related to disasters. And some Connor mentioned from ARC, the ARC, they have a payout. The government get payout and the government will distribute this payout to social protection system. And social protection system is cash transfer. So everybody will get cash, let's say $10 or for us, for example, 500,000 per month when they are in the refugee tent. So that is a social assistance. And also food for work, cash for work. So when the disaster happens, the government will employ people to clean the road, to clean this old debris from tsunami, for example, and then the government will pay them, and that is a food for work. So this is different mechanism, and this is social assistance. And we look at social care, which not really like a core on disasters, but they are part of social protections, and then social insurance. So social insurance that include health insurance, is good like life cycle insurance, employment, and here the last point you can see that climate risk insurance. So that is a part of social protections. And looking at climate insurance, there are 3 levels of climate risk insurance. So first is micro insurance, which I gave an example before. So that is a micro insurance. So in Indonesia, the government have a crop insurance, agriculture insurance like rice, livestock, and that is more micro insurance, which means the insurance is provide for low income individual. Normally, the premium is low and also the coverage also low. And MISO insurance is the insurance for group and for MSE normally. For example, cooperative. The cooperative have 10 members and everybody's have insured, and the cooperative manage arrange the insurance for their member, and also for SMEs. Let's say, for example, like tofu manufacturers. So they have a factory and they have like a member, so they can buy this if they are like exposed by risk. And then macro insurance in Indonesia, we have asset insurance that is also considered as macro, where the government insure for at the government level, and then ARC, and also that's a risk pool. Those they are like a macro insurance, which is that's referred to sovereign and government level insurance. And what's a good example? I mean, that is an example that I can bring. There are so many examples out there that's linking climate risk insurance with social protections, because when we see social protection, they are wide range. So connecting them is just how to bring all together. Right. So this example I bring here is particularly because I'm involved in the project. So if you have more question later, we can explore together. And if I cannot bring you the answer today, and I will promise you to come back later. So example in the Caribbean West, Jamaica, Trinidad, Belize, and Grenada and St. Lucia. So the Jamaican government, through Ministry of Agriculture, so they support premium subsidies for their selected farmer and also fishers. So that is as a market base, meaning market base. So the insurance is not developed by the government, but developed by private sector. So it's not only poor people can buy. So for mid-income people, so they also can buy in the market. So it's not dedicatedly provided for the government. And the CARICOM, so for us, is like ASEAN countries. So the CARICOM country have shown their interest to support premium subsidy, and that is the price or the product that we develop together with private sectors in Jamaica and in Trinidad and those countries. So that also link and preparation with social protection. So then the government will see based on the data on the social protection recipient, for example. So that is also news. We see advantage and also challenge later. You know? And another example in our project is interesting exercise that's WFP and UNCDF like make a pilot small exercise with 250 premium for social welfare beneficiaries, and that is through Ministry of Women, Children and Social Protections. And then afterward that the government take over, so that the government subsidized 2,000 afterwards. So after this a small exercise and then things work well, and then the government take 200. And the upcoming 24, 25, so now is on hold because of political change and the new government, which is also part of the challenge letter when we link climate insurance and social protections. One thing that is interesting to see why is to integrate, because that is also benefit and a part of reducing vulnerability and poor population because they get money earlier, and also ensuring timely financial support. So if this company pay premium within 3 days, like in the Caribbean case for us. So people after tsunami or after, not tsunami, let's say after cyclone, they get money within 3 days, or they get money within 10 days, or get money within 10 days. So that is, the money is arrive earlier. So they will not wait until 3 months to get money from the insurance or from donor, for examples. And one most interesting, important thing I think is also beyond protecting livelihood, low-income populations. So if we look at Indonesia, more than 60% that people's living in the informal sectors, and those people also like farmer and agricultures. So when we have a failure harvest. So the problem is not only them, they don't have a job, but also for us, we don't get a food in the market. So the government should think beyond protecting them, also to have a food security. So we see then if, for example, like a heavy wind and people don't go to the sea and we don't have a fish in the market in the next day, So the mentality or the mindset for us or for the government, the way how we think, is beyond or protecting the livelihood of farmer or fisher. And then how to integrate, and with a part of ASP that's ready, the recommendation is ready there to synergize the policy and regulations, because this is not only a single ministry who work, so that's across ministry. So where data came from, where information came from, for example, if BMKG was projecting the drought would be next month, so what does it mean for Ministry of Agriculture? What does it mean for Ministry of Social Affairs, for example? So that is also like one of the how to integrate. And the second is scaling up premium support. So now if we look at Indonesia, we have already paddy insurance, for example, or for example, insurance sapi or a cow insurance, and also it's like a fisher insurance. So that's right now we're still in a small quantity and limited budget. So then the government could see to expand more of those to scale up of the support, and also supporting enabling environment for private sectors, because the current insurance product is supported by the government and also create for the low income people. So if the government can support private sector to come in, so the private sectors could provide insurance for mid-income farmer, for example. So it's not only for low-income people to get this insurance access, but also like mid. And then the challenge, they are the some challenge targeting and eligibility criteria where when it's come to targeting, and as we learned from COVID-19 last time, we know that 10 people in Jakarta, but we don't know who and where, right? So targeting and eligibility criteria, it's always an issue, and that is also an issue in the Pacific, and that issue in the Caribbean, where we need to sort to help the government how to target and what kind of criteria that they have. And affordability and sustainability, even though the product is very cheap and still affordable for mid-income, but for low income, they're still not affordable. So the government need to support them. And then it comes to sustainability, because for them, they will not pay for the next year, because for them it's still too expensive. So to see the sustainabilities, we need to think more beyond 5 years, maybe beyond even 6 years. So graduation in social protection, in this case, for insurance premium subsidy, we need to take longer. People will not graduate very quick. And political economic risk, and this, as I said earlier, experienced in the Pacific, when a new government comes, the government new priority. I mean, like a part of the economics turbulent, for example, but political a priority is different. And the ends, like this kind of risk should also there. And accuracy, risk modeling, and data for informations. And accuracy, when it's come to product development, the more accurate the data, the cheaper is the price, because the insurer, the risk for them is lower, right? So this is challenge, and that's need to be supported by the government and also like different also external parties like donor, for example, in terms of access to data, let's say satellite data. And there are some charters like between countries so they can access more accurate data. Maybe you can find, for example, if you compare Google Map, maybe 10 years with now, the accuracy is different, right? So then also for hazard, you can predict like this is most likely happen, then the price is lower, because then the insurance company, they can predict. If they cannot predict, they will put price higher, because we are talking about market base. And social protection system capacity. And I think Connor was mentioned Malawi earlier. There was a case there, the government get money, but their social protection cannot disburse the money. When we talk about social cash transfer, for example, like people get cash like 500,000 rupiah. And out of sudden, like suddenly now the government like let's say they help, let's say 10 million people, and then with disaster, and now the government need to do 15 million people. So with this capacity also like a challenge, the government cannot expand their capacity within weeks. So that for them it need time. They will not have enough staff. They would not have enough like capacity to deliver all those money. So that is also like a part of the challenge. And I think the benefit already, I mentioned already earlier, is like to enhance capacity and also to reduce dependence on humanitarian aid. But I need to highlight here is insurance is not a silver bullet. So insurance is not one option for the all solution. It's only one solution from all solution that need to be there. So the cash transfer need to be there. So the humanitarian aid need to be there. But insurance is there where like individual get money. So this is related to promote sustainable development and also people independent on managing their resources. So the cash transfer normally is like a very small amount and also coming with a good product. For example, 10 kilograms, or maybe it's like 10 package of instant noodles. But the people, if they have money, so they can manage money themselves. So if you are a victim of disasters, like independent of managing resource is something big. So that's what I experienced after tsunami in Aceh 2024. So you get sardine the whole weeks or the whole months or the whole years. So if they give you money, you can buy X, right? So if they give you money, you can allocate it money for something else, because right now there are different reasons for social protection delivery. For example, they don't give money to, let's say, to men, because the men could spend money to cigarette or drinks, right? Or they don't give money cash, but they rather give like a product or good, rice, for example, or cooking oil or eggs. But actually, people, I mean, like the same people also can manage money themselves. I mean, like so many a reason behind. And right now, most of cash transfer, for examples, like deliver to women or to mothers in Indonesia, where because the mothers being trusted to manage money better. But if there are any research out there, we need to question that if they're there. But what if people can manage their own resource, will give them more confidence to manage their own life, right? And some opportunity where innovation financial product, a base market is very important, because that product would not only provide for poor people, but also for common people. And public-private partnerships, private sector's involvement. So normally with market base, with this kind of model, they will stay longer in the market, because they will adjust to the need. And policy regulatory enhancement. When we talk about who are poor and where, and which ministry are doing this, and how the budget allocated, and then the strengthening framework to support this integration also like a one big opportunity together, especially now together with the national program on adaptive social protection, so that it could be also integrate the part of instrument that the government can use. I promise I will go through in the end because I know that my time is up. And some strategic information that's a recommendation that I can see is scaling up initiative. As I mentioned earlier, there are some insurance product existing that the government support the premium, for example, like paddy insurance, like crop insurance, or livestock or cow insurance, and also like fisher insurance, and that could be scaled up to different provinces. And capacity building to train local government and institutions. It's always about awareness and awareness and awareness, and also awareness among populations. And Bang Saud was mentioned earlier, the insurance literacy rate is very low. And I checked with OJK for Indonesia, the insurance penetration rate is only 3%. And if we see our population, if we see our risk, like so little people have insurance in Indonesia. So then it's a raising awareness among population is very important. So it's not only for the government when disaster happens, and then they will get insurance, and then they will be covered, and then the government will spend less to help their peoples. And now when it's come about technologies, and that is much a big opportunity that company and the government can play. For example, having apps and also claim processings. And normally when we talk about low income people, most people don't have insurance, don't have a bank account. So if we see insurance, it's just number of 20 after people having bank account, right? And I'm not sure if like everyone in the participant have even insurance. So, but you have a bank account. So having insurance is after you have a bank account. But if we look here, there's so many electronic money here, like Oppo, GoPay, and all those available in the market. So the insurance company, for the small amount, for example, they can use e-money to process the claim and also pay out. So if they have apps, and then this can be paid by those e-money, so people can easily having this payout much easy without a bank account. And this with mobile technology, of course, with social media, so they can do outreach and to make people understand why they need to protect their finance, why they need to protect their livelihoods, because when something happened to them, so they will be ready to stand up on their feet again. Thanks a lot, and feel free to reach out if you have any question, or I believe we will have a question later. And thank you, and back to you, Priscilla.
Thank you, Paraja, for an insightful discussion around, I think there are some things that I would like to highlight. First, in the concept of climate risk insurance and adaptive social protection, and how both aim to address climate-related risk and have different roles to play in terms of enhancing resilience as well as reducing vulnerability. And you have also mentioned the ways of integrating climate insurance into social protection, which is crucial to reducing vulnerability and promoting sustainable development. And this integration can be done to policy synergies across foreign ministries. And also in this integration, there are also challenges in targeting, affordability, and political and economical risk. But on the other hand, there are also opportunities that exist in scaling up the existing initiatives, as well as building the capacity that are available today, as well as leveraging technologies in order to overcome in terms of one of the challenges in terms of insurance would be the low insurance penetration in Indonesia. Thank you for very insightful and informative sessions presented by our speakers from the first to third session. Before we move on to the panel session, however, I would like to invite all the participants to take a moment to capture our webinar. with a quick photo session. So please, if you're comfortable, please turn on your cameras if you haven't already, and we will start the photo session. So currently we have four panel in Zoom. So please, it will take a little while. So please bear with us, and I will start the photo session command. So you can all start smiling in 3, 2, 1. Next slide. Next slide, please. Next slide, please. Yes, that is all. Thank you for your participation. We will next continue on the panel discussion. First, we will I would like to invite our discussant, Dr. Rozana Himaz, to share her response to the presentations that we have just heard. And Dr. Himaz will highlight the issue on catastrophic risk modeling, as well as the importance of data in disaster risk finance. Dr. Himaz, the floor is yours.
Thanks a lot, Priscilla. Thank you, Saut, Conan, and Raja, for your excellent talks. They were thoughtful, they were insightful, and I learned a lot. Now, the presentations covered quite a wide range of topics, but let me try and pick some of the key points so that we can open, just before we open the discussion to the floor. Both Saut and Conan's talks showed the importance of disaster risk analysis being interdisciplinary, because hazards can be cascading, they can be complicated. Sorry, we need to understand better how they interact with social vulnerability, how they work in practice. So this interdisciplinary component is incredibly important. Saut also mentioned that we have about the funding gap that currently exists. This, of course, raises the importance of spending the money we currently have more effectively. Colin and Raja both spoke of parametric insurance, with Raja discussing about integrating insurance with social protection in disaster risk management. I'd like to present an example that sort of draws on all these themes. So this is an example of how interdisciplinary risk modeling that accounts explicitly for household level data can actually support better targeting and make sure that we are actually spending the money we have more effectively, and help us understand how to better risk layer at the household level. So by risk layering at the household level, I mean how households can use different tools, financial and non-financial, to manage risk according to varying disaster return periods. So let me give you an example, and hopefully this won't take too long, and that will sort of show you how this might be done. Next slide, please. So some of you might know that catastrophe modeling is often used by insurers, reinsurers, sometimes even governments, to calculate the costs of future perils, right? So future disasters. So what this catastrophe modeling framework gives you is a probabilistic estimation. So probabilistic because the risk quantification, the estimation that it gives you, accounts for uncertainty as well. So not just the risk, so it's not deterministic. Now, this type of modeling, and this is an example of the OSIS loss modeling framework, but then there are other catastrophe modeling frameworks as well. So they typically have a hazard module, a hazard component. So this is where you get synthetic profiles of future earthquakes or volcanic eruptions, whatever it is that the hazard that you're looking at. It's under this model that you actually create these synthetic profiles of future events. And this information is then combined with information on exposure to the hazard. And then that's combined with vulnerability and various types of policies, right? Policies of varying thresholds and limits. And then this gives you an estimation of the losses that can be incurred from a future peril. Now, conventionally, the vulnerability module, that looks at damages to buildings or infrastructure. Right? So it's engineers use this a lot, and they look at vulnerability to damages or infrastructure. But in a recent project, some of my colleagues from UCL, Bath and I, in a recent project that we completed for Indonesia, we looked at vulnerability in terms of losses at the household level. So we looked at not buildings, not infrastructure, not the macro level, but what exactly do these perils? So we looked specifically at future tsunamis. What do future tsunamis mean for household level losses in terms of assets and in terms of health costs? Can you just, so the next few slides, we can probably go very fast. Next slide, please, yes. So this slide basically shows in the work that we did, so this is what this is interdisciplinary, so this is what my geophysics colleagues did. They looked at earthquake-generated future tsunamis and created synthetic profiles for, I can't remember the number, about 10,000 future tsunamis at varying intensity levels for the coast of Java and Sumatra. So you got the inundation profiles. Next slide, please. And then you intersperse that information with exposure data. So we had exposure data for 620 Kecamatan, so 620 sub-districts, coastal sub-districts. So I told you earlier that we looked at assets and health. So if you're looking at assets, what you would need in that exposure data would be the amount of the cost, the uninsured asset levels. Next slide, please. And then, of course, you have the key innovation in our project, and that was to link microeconomic data to this catastrophe model. So instead of looking at building damage, what we looked at was damages. What we looked at was damages to household level assets. So by assets, I mean land, buildings, furniture, livestock, jewelry, hardwood trees. So lots and lots of cash, lots and lots of assets that the household had. So we looked at damages to household level assets, and we looked at losses to health, and that was proxied by increases to out-of-pocket health spending. So we used publicly available data, and this adds value to the methodology that we developed, because all the OSIS code that we developed is available open source as well. And then, of course, we used a multinomial logit model to fit this data into OSIS to generate what you call loss exceedance curves. So the next slide perhaps is the most, so this is the end result of our modeling. And what this gives us is loss exceedance curves. The top panel in this slide shows the loss exceedance curves derived for assets in Java and Sumatra. So household level asset loss for Sumatra for 1 in 600-year event, tsunami event, for example, is US dollars 399 million. So the 2004 tsunami, for example, is quite a major event. It's like a 1 in 1,000-year event. And this is quite interesting because you can, through this modeling that incorporates specifically, when you incorporate household level longitudinal data into this sort of modeling, you can actually get costs for various types of microeconomic indicators at the household level. And how do these figures compare to the government allocations for disaster relief? Saut mentioned in his talk about an allocation of the disaster pooling fund that at about 500 million. So that sort of compares. So we can see for tsunamis of various intensities, the corresponding the losses can vary as well. Now, this type of modeling can answer various questions. For example, we can know how much to allocate towards household asset losses or health losses against future tsunamis of varying intensities. But then we can also work with the policy module in this catastrophe modeling framework to see how risk can be shared amongst various stakeholders. So this takes us a bit to what Roger was talking about. With this type of modeling, you can actually say how the losses can be shared amongst various stakeholders, households, government, insurance sector. And this allows you to see how risk layering can happen for household level losses. And it can also then help you quantify residual risk faced by households. To me, most interestingly, perhaps, what we can use this modeling, we can use this modeling also potentially to create innovative insurance products. So Conan was talking earlier about how you have parametric insurance products where the parameters often come from physical science. So it can be wind speed or flood depth or a measure like that. But with including household level data directly, what we can do is that we can set triggers based on non-physical parameters, such as monetary values, for example. And this can be other triggers as well, depending on what you use as the trigger. So, for example, you can use, if you have the data, you can use other household level metrics like school days lost, earnings lost, absenteeism in terms of days, mortality. So the trigger then can be any one of these indicators as well for that specific outcome that you're looking at. And of course, the methodology that we developed can be adapted to other perils. So you can look at earthquakes, volcanic eruptions, flooding, name it. If you have the physical scientists to support you with this, you can actually simulate future scenarios at varying intensities for those hazards, and then intersperse household level data there based on a historic event to then generate costs. Of course, the modeling that we have done here, it's publicly available, but it's still very much an academic piece of work. And following on from what Conan was saying earlier, there is much to be learned about how exactly to adapt this process, how exactly to model better when you implement this in practice and when you actually adapt. But in summary then, my discussion, the main point I wanted to bring out in my discussion was that disaster risk financing has made many recent advances. There are opportunities, there are challenges, but incorporating household level data and dynamics explicitly in risk quantification can, I believe, definitely support better planning, better preparation, and it It also helps us target better, spend our money better, and risk layer better. Thank you.
Thank you, Dr. Himaz, for your valuable insights on your study in incorporating household level data in probabilistic risk quantification, which I can highlight. It is better for planning, for preparation, especially in terms of uh, financing aspect and or in building a much more sophisticated and robust financing strategy for disaster risk finance. For now, we will transition into our panel discussion. I would like to invite each of our session speakers back into the spotlight, please. So I would like if any of the speakers have a response for Dr. Hima's points on incorporating probabilistic risk, incorporating household level data on probabilistic risk quantification, of course, for better planning in each instrument, particularly maybe in the insurance instrument used in disaster risk finance. Maybe from Dr. Saut? Yes.
Yeah, yeah. Well, thank you so much. I think other speakers highlighted very important practical examples. I believe, and from other places which are applicable also in the Indonesian context. Of course, need some further, I would say, calculation or context preparation and so on. But the point I think mentioned and also shown by Rozana about the that kind of calculation. I think it's very important. I remember well, my first encounter, of course, on this topic, it's almost 20 years ago, when I learned from the Edmund Penning Russell, the blue book, and then the yellow book, and how the residential area from the vulnerability curve with also the impact and so on. And since then, of course, many insurance or insurance company use that and apply in their own context. I think Rosanna mentioned that for this academic exercise, yes, it's there. But if I can reflect for Indonesian context, what we have shown here, regulation is there, needs is there. There is some, for example, the pilotings on the agriculture, the livelihoods, and so on. The scale up was the problem. I mentioned about it, but I think with the maybe risk model or calculation, it can help to make it I would say perhaps good for the market, to make it also acceptable because it's based on evidence as well. But I think that's the next steps. And I think further to this you know seminar or this project and similar initiative that we are working or others also around now, I think we need to really show more calculations and then bring it to the maybe government, also to the public, and then how stakeholders can take that from their own perspective. Because that would give, I would say, further detailed exercise, and hence also, of course, then people can imagine it more, I would say, in terms of what is really the benefit, what is really the challenge, why it's not working, and so on. I think that's needed. We have done the landscape analysis, regulations, the roles of stakeholders with driven by government. But if we want to have this really working more, bring the private also, make it as part of the market if we want to promote this transfer. But I also would like to mention one thing, that beyond that, of course, there is a role of government, which is on the risk retention, on people and this is where the adaptive social protection will be needed, because of course with the figure of the social economy in Indonesia, there are groups that are vulnerable, but they have also difficulty in terms of purchasing, capacity for the insurance or for the market, like we also show here. I think I'll stop here just to mention that. Thank you for bringing that, and I think that will be the next homework or the details that we need to go further. Over for me. Yeah, over.
Yes, thank you, Dr. Saut. One of the things that I would like to highlight maybe from the response would be regulations are in place, but calculations and modeling, as highlighted by Dr. Himaz, is good for the market and needs to be included in the next step in the way forward for disaster risk finance in Indonesia. And it needs to be brought up to different stakeholders, from government to non-government, and to see how it can reflect from their perspective. And beyond that, it also highlights the role of government and how it manages its risk retention, and which in this social protection plays a part, since most of Indonesia's low socioeconomic class is unable or mostly choose not to buy insurance or other risk transfer mechanisms. Maybe any other response from other speakers, from Raja or Mr. Raja?
Can I?
Yes.
Thank you very much. It was very interesting because, like, for me, I reflect a lot with my daily work where we develop climate insurance products, and it's always when we talk about this issue, data and model accuracy, and also transparency with private sectors, is always about how accurate is data, how accurate is models. If that is not, the accurate is less, they will put a very high price. And when we see, I think, like in Indonesia, as we see, as microeconomic mentioned earlier, the mid the mid income groups getting bigger, but they are also in the risk location area. So I think if we talk about poor people for private sector, they know that poor people cannot buy insurance, right? So they would not be attractive for them because they know they will depend by the government, and government this year, apologize if they have another noise, because it's Asar time in Aceh. And so for them, if they see the government now, they subsidize like 200 people, let's say 2 million people this year, and then 1 million people next year. So for them also, it's not secure, right? And I think like the big elephant is now is mid-class or active poor, so to say. For example, with this model, probably we can see the model of like a rain in Jakarta. So we can see that how people get affected their livelihood by flood, because that has happened every week or every year. And those people who are actively their income in informal sectors like ojek drivers, or people who's like a motor taxi drivers, and they are depend their life or their livelihood on climate, on the weather. If they rained, if they flood, they will not operate. So I think very interesting to see that it's not only for private sector, as I'm working with private sectors, but also for the government to make better decision, right? For example, like local government, they can allocate a better budget, they can predict more, or for example, the government have like climate based forecast, so they can forecast their budget based on this information. I know that a tsunami happen every 200 years, but for other hazard, probably we can also look and help this evidence-based budgeting. Yeah. So I mean, like that is not only for private sector agency, but also for the government. Thanks a lot.
Thank you, Paraja, for highlighting the importance of the data accuracy, which can help lower the prices, since much information was known versus unknown. And Indonesia is also growing, with its middle income group growing and getting bigger, and living in risk location areas. And the role of middle class is in purchasing climate risk insurance, as well as disaster property insurance, is important, since poor people or the low socioeconomic class tend to not buy insurance and more dependent on government subsidies. it also includes the other affected stakeholders, such as informal actors that are affected, like Gojek drivers or motorcycle drivers in Indonesia, which are heavily affected by climate in their line of work. And Paraja also mentioned the needs for climate-based forecast in budgeting, which can predict the needs as well as mitigate or essentially put together a much more accurate and comprehensive financing strategy to see the future risk. Thank you for the response. Maybe last from Mr. Menon, do you have any response or comments?
Just maybe just share maybe one perspective on this as well. I think so I've come from the world of catastrophe risk modeling, and understand very well the role that it plays within the design and use of risk transfer and private markets instruments in particular. I think as well that it's useful to mention that a full probabilistic model, as is sort of described here, is useful in some situations, but in many circumstances, just even the act of making exposure registries, so mapping out, for example, which are, for example, the public assets that are owned or part owned or part responsible by government. That act of developing clear databases of exposure can really help get a long way towards understanding what are the lines of risk ownership between national, subnational, private, public ownership, etc. So, even though probabilistic models are useful, but they're, I would say, relatively tailored towards specific applications. And the first step, even towards developing full probabilistic models, is to look at those assets, so those things that could incur damage for which you might want to prearrange money for. So even doing those simple things can move you a long way towards, as a risk holder, first understanding what your risk is, even before getting towards this is a 1 in 10, 1 in 20, 1 in 50 year return probability. And one example might be to look towards the Philippines as well, who have just implemented an indemnity, a national sponsored indemnity insurance program initially for their schools program. So this really did follow from quite an intensive asset registry process that meant that the models could be developed to form a good view of risk, that meant that they could do something on an indemnity rather than on a parametric basis. And the core part of that was really the asset registry assessment.
Yes, Dr. Himaz, would you like to respond?
Just another quick point. So the institution that I work with is very multidisciplinary. We've got engineers, we've got data scientists, computer scientists, and then we've got anthropologists and sociologists and economists. And one of the things that is most stark to me in the research about natural hazards and resilience is that in the modeling, there is a lot done, I think, about modeling the physical hazards, the processes, less so multi-hazards and all that. But then on the physical science side, there is a lot of advances, I think, in the modeling. But there's a huge gap in including social vulnerability in that. And that's not surprising, I think, because it's just such a difficult thing to do. It took us 3 years and a bit more, and we're still working on it. It takes time to develop these things, but and then also when you're looking at social vulnerability, the problem is politics, right? Because people learn from disasters, and how do you include lessons that are learned? How do you include behavioral changes? So there are these advances, like, you can include agent-based modeling into these contexts. So there are things you can do, but I think that area is really, really underdeveloped. And then, of course, this huge gap in, you do the research, but then how truly implementable is it? Do politicians still prefer to quickly do back of the envelope calculations? Do they still prefer to support after the disaster is done rather than actually plan and prepare? I mean, in Indonesia, probably it's less of a problem in terms of the political commitment.
If I quickly jump in,
Yes.
I think it's like with this prediction also, because I remember back then. So after a quake, I'm talking about tsunami 2004, after a quake, and then the big wave comes. So I was really in the resident area. So the way how we run, so we run to the sea because that the street we normally goes, right? So that kind of subconscious awareness to you. So if you get out from the house, you just turn left, you are not turn back. So I think like if they have like a model like this, either it's like a single or multi-hazard modeling, at least if this kind of hazard are coming often in this area, so these stakeholders, I'm not talking only politicians, because for them is only if they cannot monetize the issue, they will not promote this issue politically. So I think it's like a stakeholder, it could be NGO, it could be anyone, like in the like community leaders. They see that, let's say, the earthquake is often happen here, and then they could, like we are like difficult to put in the curriculum per se, but if those people aware that earthquake has happened every 6 months or every 2 months, so that kind of education to people, awareness, behavior change, for example, to change them to do simulation, that is still difficult, because back then I remember that when early warnings tsunami was there, and it's very difficult to change behavior still, like turn left, I didn't turn right, because it need to be practiced every month, right? Otherwise, it was not there. But I think with this kind of model with very good information is evidence-based, this happened, and this model will show people, and this would how often the frequency of this hazard, for example. I would say that's direction.
Yeah, I wanted to quick respond as well, but I was trying to find the right hand up, but I couldn't. I saw Rozana did it, so I'm not really familiar. Uh, yes, I would like to pick up the point that you mentioned in terms of physical modeling is there, and I can tell from Indonesian perspective it there, in terms of the simulation of a potential tsunami of the megatrust, it's there, but less in the downstream, less in the social one. And I would add also economy. And I know this is your background, right? On economy. And for government, national government particularly, economy will be important. The calculation of how much in the currency, and then how it impacts the GDP and so on and so forth, and how much they need to prepare. That kind of, I would say, scenarios. Of course, we cannot give a single number, amount, but we need to provide what if scenario and all this kind of information to help, but it's not there yet, Rosanna. And I think this is something that I would encourage. We can think about it further to do that, and perhaps also colleagues from CDP, just to give you an idea that further in terms of even like, for example, a simple benefit, cost and benefit analysis sometimes not there yet. You know, uh, if you would like to introduce this kind of instrument, for example, what is the cost, what's the benefit, it's not really yet there in the details further, right? So we need this kind of information. We need the risk modeling, but not only from the physical and hazard side, but also bringing up to the level where maybe insurance can pick it up, community can learn, the local government can know, how much budget, and of course the message would be to the national government to know, okay, this is the size that we are dealing with, and what we have and what we don't have. I think it's not yet there. There is in a macro level, but not really in the context of, as you mentioned, the multi-hazard and those kind of the details. Yeah.
Yes, thank you for the responses. I think to summarize a bit from the discussions on the role of modeling in disaster risk management, there are two aspects, I think. First, how not only modeling, but sometimes in dire situations where simple mechanism or such as mapping out exposure can help. And it is also complemented with physical risk modeling, but also furthermore, incorporating, like Rozana has said, incorporating social vulnerability is also important. And as Saut has mentioned, currently in Indonesia, it is not yet there in detail, especially the what if scenarios in terms of what if this happens and what are the needs for to mitigate this. It has not yet there in details, but it is known that issues of socioeconomic factors is really important for the government in terms of planning and preparing. And it also worth noting to highlight the point that Raja has mentioned about how evidence-based information derived from the multi-hazard models can help stakeholders to promote awareness in communities, to basically help them in times of disaster to change their behaviors, to realize the importance of changing their behaviors in times of disaster emergency. So I think it has been quite an insightful discussion, from sessions to the response from Rozana, as well as panel discussions afterward. Since our time is quite limited, I would give the time for our participants in the room to have a Q&A session. Please feel free to submit your questions through the chat, or raise your hand if you would like to ask your questions directly to the speakers as well as the discussant.
Yeah, I've seen, I mean, while waiting, I've seen also some other colleagues from the ministries also here. I think the Minister of Planning earlier, I saw also disaster management, and also from the Minister of Finance, right? So I think some of the discussions points that we mentioned, of course, very relevant with their, I mean, even day-to-day or context, yeah. Just to add to the profile of the participants, yeah. Mm-hmm.
Yes, thank you for the point, Professor. Maybe are there any questions for the speakers as well as discussant? Please feel free to send the questions via chat, or you can raise your hand to ask the question directly to the... Yes, Rozana, maybe while we're waiting for the questions to come in.
While we're waiting for questions in the chat or for people to speak, I'll just bring in another dimension that might be important to look at as well. And this is about, so we know that insurance penetration is low. We would like to increase insurance penetration. But I think one area that we might also want to think about is what are the sort of the informal mechanisms of support that formal insurance might displace? We already know that there are people handle disasters at the household level in various ways. So does having more formal insurance simply mean that people use less of their savings, they use less remittances, they use less sort of informal support, which means that overall there's actually no improvement in their resilience, just that the formal process has displaced the informal process. an added comment where Saut was mentioning about a lot of things have been done. I mean, it is true, a lot of things have been done in the physical science area, but then I also noticed that there's this big macro-micro divide. So a lot of disaster risk finance is always about the macro level and the pooling fund and how do we do that. But very little has actually been done in the context of disasters about risk management and risk assessment at the household level and how to integrate that sort of the gap between the macro level analysis and the micro level analysis.
Yeah, I would like to comment on that, Rozana. Yes, that's very important point. We did like maybe 11, 12 years ago a study on remittance in one of the district where it's one of the poorest district in Indonesia, but quite paradox. It's also it's like a rice granary, rice producer for the rest of the country also, right? So one of the so we did research there because that area is really close to the coastal. It's in the coastal areas. So there is an impact of flooding. The area is called Indramayu. So we did study on the impact of sea level rise, the coastal erosion, and so on, and some of the coastal lines that have to be that move, because of the dynamics, and people have to work overseas, especially women. So there is remittance, as you also mentioned, I think also observed in many other places, including Bangladesh, also Mekong, the Philippines as well. But our research question at the time is to what extent and how the environmental changes, the climate change would be affecting of this. So we try to see how they are related. So we have some publications on that. But then not only the impact, but also how they build their adaptive capacity. So there are some observations that we found, for example, that some of the households, they were able to raise their houses because they experience, okay, we talk about this with others, and then we have money that we can send back home, and we try to increase. And then second, it's also about saving. Saving was not really common in the very poor condition or poverty conditions, but they also learn how to do some saving. So that kind of attitude, as you mentioned about this at really micro level, in opposed to macro level like pooling fund or contingency loan and so on and so forth. At micro level, this is where I would say there are good examples on that, but still I think the big problem, of course, many of the communities are not practicing that, right? So how to bring this in sometimes goes to what is called financial literacy, right? How people try to use, okay, when they get money and then they save it or they use it for building the resilience. I think this kind of connections, this is where somewhat missing, in terms of how to bring this lesson learned. And I would I would see further research, advocacy, talks like this, and also bringing different actors, stakeholders who are part of the, let's say, implementation at local level, NGOs, and so on, with evidence that we can provide, it can help. But of course, that's really, again, as you mentioned, I fully agree that that kind of, I would say, research still limited, or at least the connection to the action is still limited. Yeah.
Thank you for the response from Dr. Himaz as well as Dr. Sagala, which highlights I would say, the duality role of formal versus informal use of risk finance, formal uh, through insurance, informal use through savings and remittance. And as pointed out by Dr. Saut, there has been uses of informal use. There has been informal uses of risk finance, but not all are used um, effectively in poor households, as mentioned. They tend to not save. Saving culture, saving money culture is not as prevalent. And in the issue of the macro versus the micro level of management in disaster risk finance, there's also, as highlighted, limited research on how to build, especially since most of the previous initiatives, there are many that focus on macro level, but there has been limited research on how to specifically build resilience for communities in local level, in micro level, and there's also limited research on how to connect things that have been researched into practical solutions, into practical policy solutions, which again would be one of the uh, way forward for disaster risk finance implementation in Indonesia. Yes, so for our participants, please kindly if you have any questions for the speakers as well as the discussants, you can use the raise hand feature in Zoom as well as submitting them through this chat room. Are there any questions from the participants?
Maybe I would like to ask something or maybe comment.
Yes.
Okay. Hi everyone. My name is Irene. Or you can call me Irene also. So I'm part of the RDI also, and I'm also in Universitas Indonesia as a lecturer. I think the topic is very nice and it's suitable with what Indonesia will do for the strategy for dealing with the risk, not only the rapid but also the slow onset risk. Also, I respond to what Rozana said about the micro level insurance. I think the problem is the big gap between the macro and the local or the micro level at the low income society. The big gap, uh, the pooling fund and the problem itself in the society, in the low income society. But I think we have a potential program in each of society itself. Like Pak Saut also mentioned about Indramayu, the coastal life. Also in Pekalongan, actually they have like best practice from the community, but it led by the local government. So they have like we call social gathering like arisan. We call it in Indonesia arisan. How they manage their saving, and they use it for if there's any disruption incidents like that. The good things is it 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 managed by the local government. I mean the kecamatan level, and I think we have a potential. What I want to say is, in the local level, I think we can have uh, potential activities that we can bridge the local meso and until the macro. So I think that is what I want to say in this forum. Okay, maybe that's all. Thank you very much.
Thank you, Karen, Dr. Irene, for highlighting the case in community level where there has been initiative led by the subnational government, or in this case, maybe the sub-district or government, through informal settings, such as maybe in Indonesian term would be arisan, or like a gathering of some sorts to bridge the micro and meso level. So in here we have through the chat, what are some successful examples of insurers acting as ecosystem conveners, and what can we learn from them? Because we as NGO always think from our perspective. Yes. Any of the speakers would like to give a response? Yes, I see Honor raising hand. Yes.
Yeah, so maybe this is a different type of answer, but I think it's useful to think of insurers in the insurance sector essentially as service providers. So they operate within the private sector a little bit differently to we do within the uh, planning or development sector. Essentially, it's not so much about convening; it's more about offering a service in return for a fee. And the service that are provided by insurance, reinsurance, capital markets are risk transfer. So the ability to pay a premium in return for a policy that will pay out a larger amount if and when the thing happens that you're protecting against. So I think it's useful in these contexts to just recognize that they are generally, unless they're development insurers, if they're private markets insurance, then they should be seen and treated as useful partners, but essentially service providers who can provide that service or risk transfer with advice, etc., in return for a fee. So it's less of their ecosystem conveners and more of the service providers, I would say.
Yes, thank you for the point.
Can
Yes,
I add
Paraja.
something as well? Yeah, I think
Yes.
I'm not sure if I answered the questions, but what I want to bring is on ecosystem, there are right now innovative product on ecosystem insurance, for examples like corals insurance. So if you look at Belize, for example, the country in Central America, so they develop coral reef insurance, and this is parametric. So then the payout would be for those who manage this coral reef area. Yeah, for example, when the temperatures and that is, I'm not familiar how the calculation would be. And there would be the insurance product itself, and I think it's now being innovated because like what Connor was mentioned earlier, weather-based index, and that is a new type of insurance. And we see on this sort of perspective, there would be one advantage because people can get a quick cash and the government could get quick cash, right? So that's in the product. And another thing that I could see, for example, so when we talk about, let's say, cyclone insurance, in the coast area. So as environmental NGO could advocate, could make this as a part of incentive if people don't do that, and people will get premium subsidy, for example. So then that would be part of motivation for people not to do harm to the ecosystem. So if they will not go to do a certain things, but the benefit would be they are the one who receive the premium subsidy for cyclone insurance, for example. Yeah. So then it could be one we call it like innovative public policy, and then the government could combine ecosystems activity and also interventions with insurance. So I mean, like a part of the existing like a practice that to think that I saw that is going on in another part of the world.
Yes, Dr. Saut.
Yeah, I cannot use so I use my my hand instead. Yes, there are partly in terms of examples, but of course we were also talking about micro insurance earlier, and that's of course it has some difficulties. But in terms of successful, I can tell I met already with the General Insurance Association in Indonesia, talking with some insurance providers and so on. There are examples where people purchase, for example, fire insurance in the city, for example. I think that's quite common. But what we are talking here, of course, this is beyond that. We're talking about disasters. We are talking about other things, and this is where there is, of course, uncertainty. There is the what kind of how we estimate the risk, the peril, the all the details in terms of bringing that into the I would say sustainable ecosystem is not yet there, right? Because of course there are gaps in terms of the capacity, in terms of even regulation and so on. But I think that's the homework, and that's what we can bring from this meeting, and also something similar like this. Some further details, some calculations, I would say at micro level will help. And then lesson learned perhaps from other countries, like examples provided by Connor earlier, Raja, and other things. I think, yes, we can say that we have, but of course, the journey is still long. Yeah.
Yes, thank you for the points. Dr. Rozana, do you have anything to add? Sorry, we cannot hear you yet. You're still muted. Yes.
Sorry, I'm just pressing
Yeah.
all the wrong buttons. Well, it was just to wrap up on my previous points, really, just to say that I think there's a lot of potential as well as a lot of challenges in this area. And it is Saut and the RDI and the UCL are involved in another project that we have just started in August this year, where we are actually looking at going beyond traditional insurance and going beyond, or rather expanding the stakeholders that we can use to support financing or funding disasters. So actually looking at getting the private sector involved, maybe using something like social impact bonds. So that'll be something very exciting that we are looking forward to.
Yes, thank you for all the points. Maybe I will try to summarize. In the case of insurers as ecosystem conveners, in the terms of ecosystem as in the environment for not the natural environment, but it's the environment for the regulation, the stakeholders, and so on. Insurers mostly act as a service providers that can give out benefits for all stakeholders, as mentioned by Mr. Raja, on how a coral reef insurance in Belize can be beneficial for government as well as the communities within the area. It is also worth to note that in the case of Indonesia, there has been several successful implementation of insurance. And however, it is worth to be noted that the integration between disaster and ensuring the natural ecosystem is still not there yet, which can be a way forward for Indonesia. And beyond insurance, traditional insurance, the micro and insurance and the traditional insurance, there are also opportunities, as mentioned by Dr. Rozana, that in social finance, which can be explored further for especially in this case for disaster as well as climate impact. So yes, that is all. Are there any other questions from the participants? I would like to give one opportunity, one question maybe before we close our webinar today. Well then, if there are no other questions, I would like to extend my heartfelt thanks to our speakers, Dr. Saud, Mr. Raja, Mr. Connor, as well as Dr. Himaz, on your participation, on your insights, your presentations, as well as your discussion points. Your participation has been invaluable in making this discussion both insightful as well as impactful. We hope that the knowledge that shared today will contribute in advancing the disaster risk finance implementation in Indonesia, leading to a much more resilient and prepared nation. And thank you once again, and we look forward to continuing this important conversation in the future. Have a good day. Have a great day.
Thank you very much.
Thank you.
Thank you very much. See you in the next session.
Thank you, Bang Saud.
Thank you, Bang. Thank you, Connor. Thank you, CDP and everyone. Ardia itu, Rozana. Bye.